Welcome back, everyone. I am absolutely thrilled you're joining us today. We are unpacking a massive, truly gigantic technological footprint that is somehow hidden right in plain sight. In today's explainer, we're demystifying Guidewire's Q3 2026 earnings. Now, if you follow enterprise software or the modernization of global finance, you definitely know Guidewire. They're basically the quiet giant powering the entire property and casualty insurance industry. So today, we're going to strip away the noise. We're looking strictly at the numbers, the scale, and the underlying strategy behind their latest quarter to extract the crucial signals you need to know.
Okay, so let's just dive right in and set our roadmap. First, we'll map out the massive P&Z market. Then we'll look at how Guidewire powers insurance agility. After that, we'll cover platform scale and adoption, the engines of continued growth, and we will wrap it all up with their Q3 2026 financial momentum. Starting with Section 1, the massive P&C market, unpacking a global giant.
Now, to really grasp Guidewire's opportunity, we've got to wrap our heads around the sheer monumental scale of the P&C space. We're talking about one of the oldest, most complex, and heavily regulated industries on the planet. The ultimate yardstick here is direct written premium, or DWP. Think of it as the total premium on all policies written by a primary insurer during a specific period. This is absolutely crucial because it's the exact currency Guidewire uses to measure its addressable market.
And when you look at it globally, this industry is a $3 trillion durable giant. $3 trillion in direct written premium, just steadily growing right in line with global GDP across the Americas, EMEA, and the Asia-Pacific regions. But here is the major takeaway. This wealth is not spread evenly. No way. A staggering 85% of this global DWP is heavily concentrated within Tier 1 and Tier 2 insurers. We're talking about massive entities writing over $1 billion in premiums. And that concentration is exactly why Guidewire focuses so relentlessly on solving the unique, deep complexities of this highly lucrative segment. Moving right along to Section 2, powering insurance agility, the industry's nervous system.
So, $3 trillion. It's huge. But it's also a trust-based, highly regulated industry completely bogged down by decades of legacy IT debt. To even survive, these insurers literally have to modernize. They need precision, they need resilience, and they need compliance at a massive scale. Enter the Guidewire Cloud Platform, or GWCP. Let me be super clear about this. This isn't just some lightweight app sitting on the side. GWCP is the absolute operational and financial backbone for these insurers. It's embedded across the most critical core functions you can think of: pricing the risk, underwriting policies, managing the policy lifecycle, settling claims, billing, the whole shebang. If this system goes down, the insurer stops functioning. It is genuinely that critical. And what's truly fascinating is how Guidewire injects cutting-edge tech directly into these traditionally slow-moving environments. They provide this comprehensive suite: Pricing Center for dynamic modeling, application services like Policy Center and Claim Center, and robust underlying platform services. But check out those Gen AI services right in the mix. Guidewire is actually providing large language model and RAG access to these legacy insurers. They're essentially acting as the bridge that allows century-old financial institutions to safely adopt artificial intelligence. It's a real game changer.
All right, Section 3, platform scale and adoption, a massive footprint.
We know the market's huge. We know the software is mission critical. Let's do a rapid-fire look at exactly how deeply Guidewire has penetrated this market over its 25-year history. Get ready for this. $775 billion. That's the total direct written premium currently under contract with Guidewire right now. Remember our total market size of $3 trillion? Guidewire Software is already processing over a quarter of that entire global volume. Just an absolutely unfathomable scale of financial responsibility running through their cloud platform. And that mountain of $775 billion in premium, it's generated by just 349 core customers. So we aren't talking about thousands of small, low-value accounts. These are hundreds of the absolute largest, most complex financial institutions on Earth, relying every single day on this infrastructure. And our final number for this rapid-fire sequence, 43. Guidewire is running in 43 different countries worldwide. The takeaway here is they aren't just some regional player. Get this, 9 out of the top 10 global insurers rely on Guidewire. They've essentially become the default operating system for the highest echelon of the global property and casualty market. Which brings us to Section 4, engines of continued growth, strategic pillars. Now, you might be wondering, when you already serve 9 out of the top 10 global insurers, how do you possibly keep growing?
Well, they've got 4 distinct growth pillars. First is core expansion, basically migrating existing legacy customers fully into the cloud. Second, net new customers. And what really stands out here is they're reporting all-time high win rates. Their sheer dominance is actually accelerating their ability to win over the holdouts. Third is new applications, so cross-selling things like Pricing Center to their existing base. And fourth is geo and line of business expansion through rapid localization. It's a super methodical, multi-pronged attack to just capture more and more of that $3 trillion pie. So strategically, it all sounds absolutely fantastic, right? But hey, we don't just take the narrative at face value around here. We need the proof. How does all this platform dominance and strategic expansion actually translate to the bottom line? Let's use that question to clear our minds and jump straight into the hard financial results. Here we go. Section 5, Q3 2026 Financial Momentum, Accelerating the Business. This is where the strategy literally hits the spreadsheet. The momentum here reflects a business that's fundamentally accelerating its profitability. Boom! 35% year-over-year growth in subscription and support revenue. In Q3 alone, this revenue stream hit $245 million. I mean, this is exactly what you want to see in a cloud software transition. That subscription revenue now makes up a massive 66% of their total revenue. This highly predictable, recurring engine is just growing at a phenomenal clip. And it brilliantly illustrates the leverage in their financial model. Total gross margin came in at 64% on a GAAP basis and 66% non-GAAP. But here's the real kicker. Their subscription and support gross margin specifically jumped up to 74% non-GAAP. As they scale those 349 core customers on their cloud platform, it's getting incredibly cost-effective to serve them. That means more and more of that revenue is dropping straight down to the profit line. Which leads us to this absolutely jaw-dropping number, 586% year-over-year growth in non-GAAP operating margin. In Q3 2026, operating margin hit $31 million, which is 8% of total revenue. That's a huge 7-point jump from the prior year. All that disciplined cloud migration, those all-time high win rates we talked about, it is all culminating in explosive profitability growth. And actually, they aren't stopping there. Guidewire explicitly noted that targeted acquisitions focused on product expansion remain a huge future growth catalyst for them. They've got the cash, they have the platform dominance, and they are actively looking to buy up smaller, innovative technologies to plug directly into that massive $775 billion ecosystem like a giant puzzle.
Which leaves us with one final provocative thought for you to chew on today. We already know Guidewire is the backbone for 9 of the top 10 global insurers. But as AI adoption drives unprecedented market innovation and creates this absolute urgency for these financial giants to modernize, how much deeper can Guidewire embed itself into the global insurance nervous system? Because let's face it, they aren't just selling software anymore. They're selling the critical infrastructure required for the future of insurance. Thanks so much for joining me for this explainer. Keep learning, keep analyzing, and I'll catch you next time.